Many property investors are familiar with the advantages that borrowing to invest can bring. By using a relatively small amount of capital at the start of an investment and borrowing the rest, it allows the investor to leverage and own a much larger asset. Over time, if the asset appreciates in value due to the leverage, the returns on the small proportion of capital are magnified. The downside of this is when the asset falls, the leverage can magnify losses as well. And if the falls are very large, it could result in losses greater than the investor's initial capital. However, with a C2 structured investment, the loans are limited recourse. This means that the lender may only recover amounts owing on the loan by selling the structured investment. So even if the underlying asset fell substantially, investors are not exposed to any losses on the loan principal and can simply walk away. These types of loans can give investors confidence to increase their exposure to an underlying asset, such as shares. Take, for example, an investor that makes an investment by borrowing 100% of the investment amount using a limited recourse loan, paying interest rates of 5% per annum, and invests in an asset that grows at 10% per annum. As the investor borrows all the money, he is only required to fund the interest costs and any fees. Based on these assumptions being 10% per annum growth rate and a 5% per annum borrowing cost, the investor could double their money over the term of the investment. Conversely, if the asset fell, the most the investor could lose is their interest expense and any fees. While leverage offers many benefits, investors need to be aware that there are some key risks associated with leverage structured investments. In particular, the use of leverage can magnify gains as well as losses. There needs to be sufficient positive performance in the underlying asset to generate a net positive return in excess of any borrowing costs and fees. Leverage structured investments are usually designed and constructed to be held until maturity. Redeeming early or the occurrence of an early termination event may result in a lower than expected redemption price. For a comprehensive overview of risks, please refer to the relevant offer documents. Leverage structured investments from C2 can provide investors with an efficient way of gaining exposure to assets they believe will perform well, with minimal capital outlay and the added benefit of limited recourse borrowing. To find out more about leveraged investment opportunities from C2 Specialist Investments, please contact your financial advisor or C2 Specialist Investments.